here at Hire. At Hire, our mission is to maximize the skills and opportunities for formerly incarcerated and system-involved youth and adults here in Orange County. And we do that through mentorship, employment, and community building. Today, we would like to welcome Diana Young and Kim Chin with Banc of California to share a little bit more information on their different banking services, and it's called You Can Bank on It. In the chat, I put my name and our information about Hire, as well as the participation guide to be used along with this presentation if you'd like. And if you have any questions or anything, feel free to put them in the chat. Go ahead, Kim.
Hi, everyone. Welcome. I'm glad you can join us on You Can Bank on It. My name is Kim Chin, and my colleague is Diana Young. Just a little bit about us. We both started in working as a teller in the branch. And over the years, we've covered several roles. Currently, we work in compliance with the Banc of California. The purpose of this module is to cover banking services, and it's designed to help you build a better understanding and a positive relationship with the financial institution. The model will describe the different products and services that are available in financial institutions. We're going to be providing information on selecting different financial products, services, and providers, and also some basic steps on how to establish an account and managing those accounts. We will also try our best to cover prepaid cards, how they work, and the tips on using them. I'm not sure if you got the participation training guide, if you were able to complete the pre-training survey. It's on page 41 of your guide. There's a set of, I believe, up to 6 questions. And I believe with an exception of the last question on 6, which is not showing, the rest of the questions here are all false with an exception of question 3,
Number 3.
Which the answer is true. So if you have any questions, please raise your hands. We're more than happy to elaborate on it. So section 1, different financial products, services, and providers. Please refer to page 4 of your participant guide. The key takeaways in this module is to consider your own needs and shop around for the financial products and services that fit those needs. Financial institutions, banks and credit unions. Banks, including savings associations, there's credit unions, they accept money, a deposit of money, lend money, and they may offer other products and services such as credit cards, car loans, personal loans, mortgages, and others. There are some distinct differences between banks and credit unions. For instance, with the bank, you have customers. Credit unions, you have members. For banks, usually there's no membership criteria, and most of banks are owned by shareholders. Credit unions have membership criteria. They're not-for-profit organization owned by those members. Membership criteria could be depending on where you live, work, or association that you're part of. Deposit insurance for banks. The Federal Deposit Insurance Corporation protects funds depositors placed in federally insured bank in case of a bank failure. Insurance up to at least $250,000 per depositor, per FDIC insured bank, per ownership category. So if you have a solely held account where you're the only person on it, it will be insured up to $250,000. Or if you have an account that's jointly held, that account itself is also insured up to $250,000 because of the different ownership. Shared insurance is for credit unions. It's by the National Credit Union Administration. It also protects funds depositors placed and federally insured credit unions. Insurance rules similar to those of FDIC. Accessing services. You can access banking services through retail locations, such as the branch, automated teller machines, otherwise known as ATMs. There's also customer service telephone numbers and emails that you can reach out to. Most financial institutions have websites that you can go to look up information, as well as additional contact information. And mobile banking and smartphone apps are also another way to access. You can also request for reasonable accommodation if needed. For instance, for the hearing impaired, you can request for auxiliary hearing devices that attach to your ATM. Products and services available at financial institutions. There's deposit products, credit products, and other products and services. Deposit products include savings accounts, checking accounts, certificate of deposits, and money market accounts. Examples of credit products include credit cards, lines of credit, installment loans, and mortgages. Other products and services include check cashing, money orders, prepaid cards, debit cards, cashier's checks, remittance transfers, wire transfers, basically, person-to-person payments, online and mobile banking, and bill payment services. Other financial service providers include convenience stores and U.S. postal offices. I think most people go to the postal office to buy the U.S. postal money orders. Stores that sell prepaid cards, like prepaid Visa or MasterCards, or retail cards, like the ones that you would go to Target for. Check cashing stores and outlets where people can go and cash a check that's made payable to them. Payday lenders, where you could borrow loans on your paycheck, upcoming paycheck. Pawn shops and vehicle title lenders. What financial products and services do you need? So some things to consider is, are you trying to save money, spend money, manage the money you have, or do you need to borrow money for a large purchase like a car? Start with your needs when you're considering what you need. I believe there are, sorry, I don't think we are going with this one. So section 1, remember the takeaways. Consider your needs and shop around for the financial products and services you need. Diana?
Section 2, opening an account. You can see page 14 in your participant guide to follow along. Key takeaway. Know the general process for opening a savings or checking account, including options if you are initially unable to open an account. Savings and checking accounts. Safety and security from federal deposit insurance. That's that $250,000 that Kim mentioned earlier. Earning interest depending on the account. Convenience, relationship building, and important consumer protections. You can apply in person or online on the company's website. Complete an application, verify who you are, who you say you are. Decide whether to opt in, and that's for privacy issues. Make a first deposit, receive disclosures, possibly sign documents, activate account tools, and ask any questions. Banking history reports. Everyone is not approved for an account. Your banking history will depend on whether you have unpaid negative balances on your accounts, suspected fraud related to the account, or your account was closed by another financial institution. Everyone has a right to a free consumer report every 12 months. That's TransUnion, Experian, or Equifax. You can skip that one and that one. Possible options. Section 2, remember the key takeaway. Oh, possible options. For this challenge, not enough money or account fees too high. Consider low-cost account options. Negative information and banking history. Report, second chance checking account. Negative information in credit reports or low credit scores. Credit building loan, secured credit card, credit counseling. No social security number, other identification documents. Cannot open a particular account, another type of account, perhaps a prepaid card. The key takeaway in section 2, know the general process for opening a savings or checking account, including options if you initially can't open an account. Kim?
Section 3, managing an account. See page 23 in your participate guide. The key takeaways for this section is to learn the rules of your account, keep track of how you use it. This can help you keep the cost down and develop a positive banking relationship. Using a savings account. Build savings by depositing money and keeping it there to earn interest. It's designed to help save money for the future. It often offers higher interest rates than a checking accounts that earn interest. It is not designed for a high number of transactions. Managing a savings account. Read the rules of your account. Keep track of your deposits and withdrawals. Review your account statements. Set up email or text alerts if possible, and stay safe online. Using a checking account. For frequent use and multiple transactions. Deposit money, pay bills, make purchases, and access cash. ATM cards and debit cards, they're not the same thing. When you use them, money is taken out of your account. Checks. Tell your financial institution to pay money to somebody else, namely the payee listed on the check. Some checking accounts do not use checks. Overdrafts. An overdraft is a transaction that goes through your account, but there's not enough money in the account to cover for it. There are different programs to cover overdrafts for ATM card and debit card transactions. You opt in for certain transactions processed for a fee. Do not opt in, certain transactions are declined. Financial institutions decide if they will cover checks and other payments that would cause an overdraft if processed. If an overdraft transaction is covered, expect to be charged an overdraft fee. If it's not covered, expect to be charged a non-sufficient fund fee and possibly a return check fee. Here's an example. Rodney has $50 in his checking account with an opt-in option. On March 1st, he had 3 transactions. Let's say there's a $15 birthday cake purchase, $25 gas purchase, and a $45 phone bill on auto pay. So obviously he doesn't have sufficient funds in his account to cover all the transactions that's clearing this on March 1st. So the results could be 1 or 2 overdraft charges of $35, depending on the order of those 3 transactions that are being processed. So for instance, if the $45 phone bill was covered, then he would not have enough money to cover for the birthday cake or the gas charges. Direct deposit. Deposit money safely and securely into your account electronically. There's no need to make a deposit in person. Many employers offer direct deposit for paychecks. You might be able to have part of your paycheck directly deposited into your savings account. Automatic bill payment / automatic debit. Automatic bill payment are scheduled and send payments through your financial institution. They're one-time or a reoccurring payment. Automatic debit, you give permission to a merchant or a lender to take the payment directly from your account. Make sure you have enough money in your account to cover these payments. So here's some rules to managing your account. Read the rules. I guess this is a checklist in your participant guide. I'm sorry. Rules to managing your account, keeping track of your deposits and withdrawals, reviewing your account statements every month to make sure that there isn't any errors. Keep track of holds on your debit cards, and set up email, text, and alerts. So managing a checking account, again, read the rules of your account, keep track of your deposits, withdrawals, and you can use a mobile app, your financial institution's online banking system, another program, or a transaction register. Well, ways to manage a checking account is to review your account statements when they become available to you, keep track of holds on your debit card, set up an email or text alert for when the transaction is processed in your account. Consider linking your checking account to your savings account or a line of credit. This is to cover for any potential overdraft you may have. Protect your credit card. Stay safe online. ATM teller machine or ATM cards. Use an ATM for a variety of account transactions. You can ask your financial institution about purchases with an ATM card. Money comes out of your financial institution's account. There are various accessibility features. Keep safety in mind. Debit cards. They do what ATM cards do, plus more. Looks like a credit card because they have a card network logo on them, but they are not credit cards. It can be processed with the credit card network, but still not using credit. So the key point is the money is taken out of your checking account that the card is linked to. Person-to-person payments, or otherwise known as P2P payments. These are money transfers from one person to another. It helps with everyday money transactions, such as paying your babysitter or reimbursing your friend for part of the lunch. There are different P2P systems. Each work differently. This is a rapidly changing area. Keep in mind that the federal deposit insurance fees, privacy, funds availability, and more. Mobile wallet apps. They make point-of-sale purchases with your mobile device instead of a debit card or credit card or prepaid card. Keep your device and information secure. You can visit onguardonline.gov for additional information. Section 3, key takeaways. Learn the rules of your account. Keep track of how you use it. This can help you keep the costs down and develop a positive banking relationship. Diana?
Section 4, prepaid cards. This is page 34 in your participant guide. The key takeaway: prepaid cards allow you to spend or access money loaded onto them. They usually aren't linked to a checking or savings account. Before you use one, review its features and fees. This is like a Visa prepaid card, not linked to a checking or savings account. Access money loaded onto the card. You load the money in person, by phone, online, or through a mobile app. Use direct deposit, some cards. You can register the card to use all its features, not the same as activating the card. How prepaid cards work. Reloadable prepaid cards, payroll cards, electronic benefit transfer, EBT cards, college or university identification cards, prepaid cards for stores or public transportation systems. This is a checklist you could find in your page 35, your participant guide. These are the fees common to your reloadable prepaid card, such as a monthly fee, a transaction fee, account or card reload fee, a bill payment fee, ATM withdrawal, balance inquiry, additional card, inactivity fee, last or stolen card replacement fee, or a fee for canceling the card. You have a lost or stolen prepaid cards. Report loss, theft, or charge you did not make right away to the card issuer. Protections depend on the type of card. Generally, you must register a card to get protections offered by the card user. Tips for using prepaid cards. Review your account and dispute charges you did not authorize. Understand your card limits. Know the fees and how to avoid them. Report loss or theft immediately. Stay safe online. Section 4, the key takeaway. Prepaid cards allow you to spend or access money loaded onto them. They aren't linked to a checking or savings account. Before you use one, review its features and fees. That is the end of our presentation. If you have any questions, please feel free to ask them and we could answer your question for you.
Thank you so much for joining us for this presentation. Our next workshop will be on Wednesday, March 18th at 3 o'clock on your income and your expenses.
Thank you.
Thank you.